Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's nice to see you all again and very happy to know this. And so we will just see if any queries are there by any of you. And Rama Devi wants to see if I can show your Guru's photo. I'll check up if I have on this computer. It's good that you are asking today being Thursday anyway. So Guru Brahma, Guru Vishnu, Guru Devo Maheshwara, Guru Sakshat Parabrahma. That's my Shri Guru. So I also thank Karthik for his nice greetings. And I don't know, maybe I just casually mentioned I'm going to Dubai. So thank you for your good wishes, sir. Now, Nenshi Saxena wants me to explain the transition period one more time. Now, I have given the explanation of the transition period. So it is quite natural that some of you will have a doubt again and again. So the idea is rotation of auditors, they introduced in 17, right? So when they introduced it, they said in 17, everybody had a lot of hardships. So they said, please don't do this like this. So they gave 3 years of grace. They gave 3 years of grace. So which means, suppose a company has already completed 10 years or more than 10 years. Okay. Assume that there is a company which has, what you need to do now, since all of you love to keep your Board of Studies material in your hand when you're talking. If you have, I'm sure you have the Board of Studies material with you. Kindly take the page number 10.11, where illustration is there. That is very clear. Idea is this particular provision came, okay? This particular provision came into existence in 2017. So what they said was, if a company has already been there for more than 10 years, then still, they will get 3 years. So if you look at 10.12, you will find there is a table there. 10.12 mein table hai. This is the table given by the ministry. So the top is the guy who's finished 10 or more, like me. My firm, in most of my auditees which are coming in rotation, we had completed 10. So which means when this notification came in 2017 now. So in 18 March ka AGM, that is in 30th September 18, this should have been removed or rather rotated and somebody else should have come. But they said no. Everybody went and cried, we can't do this. So they said take 3 years more. So just for, again I'm revising it, kindly understand it. The man has come, a firm has come, and we'll talk only about firm here. Because for individual it will be 5 years. For a firm, it will be 10 years. So we are talking about a firm. Firm has already completed 10 years. Now, still they will have 3 more years. So if they have already been there for 10 years, plus 3, they can continue, they can be 13 years. Okay. Another firm, 9 years. Then already finished 9 years now, plus 3. So 12. Already completed 8. Plus 3. Okay. They'll have 11. So wherever you are, you can go another 3. Wherever you are, you can go another 3. Be careful. There are cases where you've been there for 5 years. Now, 5 years over. You have another 5. No, why 3? Because anyway you have 5 now. You can go on with that 5. Like that. So it is only in up to 7 years that the 3 years will be relevant. Once you are in 5, another 5. Okay, 4, then your total period is 10. Take 6, like that. Only for those cases where they have already completed 10, they give extra 3. So everybody gets 3 years more. Everybody gets 3 years more. Okay, it's the point. Right? Those who have completed 1 year will have another 9 years. Right? So they said take more. Say there's one more illustration here of 5 years or more than 5 years. Then they said you take 3 years. You get 3 years. But the minute you come to 5 years, they say why? Because 5 years is one period. You have completed it. You got another 5 years. Why will give you one more 3? It is only guys who are in the middle of that second 5 years. They said, please go on and take another 3. So the grace period of 3 years was given to those people who had completed 5 years or more. If it is 5 or less, they said, you have another 5, take it. So this is the best explanation I can give for this provision, which is, in my humble view today, a little redundant because most of those firms, which were there, have now completed that. Now that second cycle of rotation has started. The first cycle is over. The second cycle, and the second cycle onwards, there is no question of grace period. For example, if there was a firm that was appointed in 2017, now they would have completed the first 5 years. Now they get the another 5 years. They'll be going on for the next 5 years. So for them, there is no question of that extra 3 years and all. Whatever happened, now you are in the normal cycle. This was there only at that time, especially for people who are having seniority, who have, completed 10 years or more. Okay. Second paragraph of example 2 on page 10.5. Now that I have the material with me, let me do that also. 10.5. Where is the example? Audit committee recommended KPM and associate chartered accountants providing a statutory auditor to the board of Surya Solar. However, the board of the Surya Solar, however, the board disagreed with the recommendation. Board shall refer back the recommendation for reconsideration, citing reasons for such. If the audit committee, after considering the reasons given by the board, decides not to reconsider its original recommendation, the board shall record reasons for its disagreement to the committee and send its own recommendation for consideration members. And if the board agrees with the recommendations of the audit committee, it shall place the matter for consideration by members in the committee. Yesterday, this question was asked by some student or maybe by the same student, possibly who was a little confused with this example too. Simple. There is a conflict between the audit committee and the board. More it will prevail. More it will prevail. Finally, so suppose the audit committee prefers to send one recommendation. The board is not happy about it. What they are saying is, as a matter of courtesy, send it back to the audit committee. That we don't want this firm, look for somebody else, or why don't you look at this firm? Something like that. The audit committee again sends back the same old firm. Then the board can reject and can go for their own choice. Who is superior, the board or the audit committee? 100% the board is superior. But the recommendation of the audit committee should be given importance. But if you still want to reject it, you can. So even in the case of accounts, the audit committee may make certain recommendations. Finally, this you will not understand now, but when you come to directors in final, you will understand. The audit committee, chairman of the audit committee has right to comment about how certain disclosures should be made in the accounts. So he may make certain recommendations, the committee, but the board, in its wisdom, may decide not to go with it. In which case, the audit committee chairman has the right to appear in the AGM and talk. But then that is too much. Extreme case where audit committee chairman and the MD are colliding. Not that they can't, but at that point in time, the board only will win. That is what they say. Finally, what are they saying? If the board, if the audit committee, after considering, decides not to reconsider its original recommendation, they say we want this, whatever we recommended, do. The board shall record reasons for its disagreement with the committee and send its own recommendation for consideration of the members. That's all. Audit committee recommendation they will ignore, but they give the reasons and then send it. Arbitrarily, they cannot do it. That's all. But if the board now, second time they look at it, they agree, some and okay, chalo, send the same way. And so that is what it means, sir. Nothing great about it. You need not get worried about it and wonder what it is. If there is a conflict, the board wins. No, okay, one second. Tikshan, don't keep on pressing submit. You are unnecessarily pressing submit. Don't do that. I think you don't know what you're doing. What you're doing is you are submitting it again and again, thinking that I have not received it. Don't do that. It's clearly coming in the query pad. Chalo, Ankur Patel answered 10.5, 10.8 in point A, 10.8. Let me, I didn't mind clarifying because there's a little bit of a vague topic only. 10.8, 10.18. 18. 10.18 in point A. No, you're jumping the gun, yeah. Removal. Hello, brother. We will come to that. Hello, brother. Don't jump. I have not come to removal. Why are you jumping? Don't jump. Jumping is dangerous for everybody, including you. Removal. Don't jump. When I come to removal, I will teach you. Don't worry. But one thing, your question is based on a doubt, which I can clarify in one shot, Prince. Board result, just watch my mouth. Don't get a doubt again, Prince. The minute we say ordinary or special, it is only members. In the case of board resolution, there can be no ordinary or special, only board resolution. So to answer your question, is that a board resolution of members? The minute it says special resolution, and it very clearly says in point A special resolution of the company. The minute it says company, it means only members. Company is members. If they want board, then they will say board. And special resolution, 100% only members. It cannot be the board. There is no concept of special resolution for board. If firm completes 5 years and they get again 5 years, no more 3 years. Already completed 5, another 5. That's all. See, in that cusp period, those people who had completed 5 or more, for them only that 3 was given to tide over. So they were in between that period. For them, they gave that extra 3. Okay. So if it's 5, then they get another 5 and move on. That's all. Okay. Prince wants again Dubakur and all. Anyway, you got the point now, Mr. Prince. Kindly confirm to me because the doubt that you have raised is there. So, good. So now moving on. Now we will go to removal. I've already spoken about resignation. Casual vacancy, we will still be seeing resignation in detail. All that we told here was, if there is a casual vacancy, that casual vacancy by way of resignation will be recommended by the board and it should be approved by the members at a general meeting convened within 3 months. Whatever it is, that auditor who is appointed in the casual vacancy due to resignation, he will hold office only till the conclusion of next AGM, right? This is only for resignation, not for anything else. Now, whoever is appointed as auditor now, he will hold office for the next 5 years. So, beginning with this conclusion of this AGM, he will hold for the next 5 years. So, at the conclusion of the first AGM, the auditor will be appointed. He will hold office till the 6th AGM. 6th AGM, conclusion of the 6th AGM. Now, a firm means they will be reappointed for another 5 years, meaning 7, 8, 9, 10, 11. Like that, it will keep going. Now, if rotation applies, then there cannot be automatic. But if rotation does not apply, then the retiring auditor may be reappointed at an AGM. Reappointed. Then if he is not disqualified for reappointment. He has not given the company a notice in writing of his unwillingness to be reappointed. And a special resolution has not been passed in that meeting appointing some other auditor or providing expressly that he shall not be reappointed. So in a way, this is like automatic reappointment. Suppose at an AGM, with ignorance, that company, ignorance, absolute ignorance, because no company will, any AGM, 100% these items will come. So adoption of accounts, appointment of auditors, and if there's a declaration of dividend, and reappointment of directors retiring a rotation. These 4 matters are ordinary business. Definitely it will come. But by ignorance, if some stupid company fails to put that matter and does not pass a resolution, even then he will be continuing. So long as he is not disqualified and he himself has not told, I'm not willing. If he is, please in the next AGM, don't appoint me like that. Then no automatic. So, and in that meeting, a special resolution has not been passed at that meeting, appointing some other auditor or providing explicitly that he shall not be reappointed. So you pass a special resolution saying that this man should not be reappointed like that. Okay. For that, you need a special resolution. When you are appointing a person other than the retiring auditor at an AGM, it requires special resolution. If you are reappointing the same auditor, then no need for special resolution. Okay. But you are appointing an auditor other than. So if that resolution is not passed, then automatically the existing auditor will continue as the auditor, will be reappointed. Okay. But suppose at any AGM, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. Okay, sir. Now you are all interested in having a new auditor. Then you don't want the existing guy. Then that also requires a special notice. We'll see that. There is removal of an auditor at an AGM. Okay. If such a removal has happened, then the existing auditor cannot continue. Okay. That is what they are trying to say. Where a company is required to constitute an audit committee under section 177, all appointments, including filling of casual vacancy, etc., shall be made. Again, please note, after taking into account the recommendations of such committee. That's all. It is not that whatever the audit committee says, I have to appoint. No. If that impression is there in your mind, still, please remove it. Okay. But practically, no company will violate the recommendation of the audit committee. What they will do is, they will have continuous internal conversations. Finally, they will convince the audit committee chairman and ask him to recommend through the audit committee so that the documentation will be completed. If not, worst case, only this whole, your 10.5 matter will happen. Where, what is that? Dalpur Patel was saying, that whole thing, it's very, very dangerous. Where the audit committee is giving one recommendation, board of directors are telling somebody else. That auditor's job will be very difficult because the press will be watching. Even if that firm crosses one limit, anything goes wrong, immediately they will say, the audit committee said not to appoint this fellow. They have appointed like that. In fact, no auditor will take that risk now, where the audit committee is not recommending you. Better not take a risk and take up that work. However lucrative it is, better avoid it. Or go and convince the audit committee chairman that you are capable of doing it. Whatever the reservations you might have, convince him. And then either you do it or let the company do. And then this is my practical suggestion to you. Okay. When rotation is applied, when it is not applied is a fair, very, very unfair question you are asking, Kiranji. Kiran, that is not fair. Yesterday class, it was taught. Which are all the companies to which rotation applies? Here. That is all listed companies. That list was there, no? Sorry. See, all listed companies, rotation, these categories. It's there in the material. Go through it, Mr. Kiran. For these companies, also, there will be rotation of auditors. In the last class, it was taught. Maybe you missed it. Okay. Let me make a note of this. Question number 7. TYK. If time permits, I'll do that, definitely. Moving on. We've got a lot of slides to cover and I'm sort of going slow. Chala. Now, removal of auditor. Wherever possible, I'll go a little faster because it's fairly simple. Removal of auditor, you can understand under 3 heads. 1. Before expiry of term of office. Before expiry. Meaning, you appointed him in the last AGM for 5 years. You appointed him at an AGM for 5 years. 2 years over. Third AGM, after his appointment, you want to, before that, whatever time, AGM, BGM, chuck him out. You don't like him. He's not doing his job properly, whatever. Before expiry of term of office. Usually this will be only when there is a conflict between the auditor and the directors. See, the directors are doing something, or the CFO is advising the directors or whatever to do some nonsense which the auditor is not accepting. So they feel that this guy is wasting our time, not cooperating. Sometimes auditors can also be very non-cooperative. That is not intentionally, but because they are overcautious, they don't have confidence in themselves. So they keep on doubting everybody. They keep on delaying the audit. So the 2 years they keep on delaying, not finalizing, not signing. Then the board gets frustrated. So they call somebody else, maybe my firm, and then we go there. They like us. You see, this is what we want. This is what we want. Then within say 3 months, we'll give you our findings. You be clear. You tell us what to do. If you're not agreeing with us, I'll qualify. If you're okay for that approach, I'll go ahead. They're happy. Boss, you are better than that guy. He does nothing. He simply keeps on auditing. When will he finish? I will tell, boss, I will also go. I will do it. But at the end of the day, I will tell you, these matters are not in accordance with accounting standards or whatever. I'll go. Either you correct it and represent the way I want, or you make the disclosure in your notes. Then I might not go for a qualification. Whatever. So this discussion and all we'll engage. But some auditor may not want to do that. They keep on wasting time, nitpicking, going into areas which are, his risk will not get mitigated because of that. The bigger risk will continue. By that nitpicking, no risk will be eliminated no audit risk will be eliminated by that nitpicking. This should be tallied, that should be tallied. Maybe they would have tallied, no, everything should be tallied like this. Some members of our institute are like that. I hope none of you will become such a member of nitpicking type of member. You should have broader awareness of the audit. When you should, seeing it, you should know this is where there is a problem. There you should go and you should throw high, the doctors will have that internal torch now. Like that, you should hit the torch there. So that in that bright light, what this company is doing will get thing. So even since he wanted Dubakur, I'm telling, even Dubakur Limited, you can audit. But Dubakur audit will not be the same as Infosys audit. Yeah. The way you conduct the audit will be different because the risk is higher. But still, you should be able to certify, either qualify or do something about it. So this guy is not able to do it. So you want to remove him before expiry. Or genuinely at the next day annual general meeting, you feel some other auditor you want, whatever. You want, said gentlemen, please don't mind. So the members feel no, you want. See, best way to do it is you talk to the existing auditor, ask him to resign. And at the next annual general meeting, you appoint somebody else. Or at the next annual general meeting, politely you inform this gentleman, sir, we are not appointing you. In which case you have to ensure that you pass a special resolution for reappointing a person other than the retiring auditor. If some members feel that the existing auditor should not be reappointed or that a new auditor should be appointed, then that is 144, where 140 within bracket 4, where you have to give special notice. We'll see that. Lastly, in cases of fraud, where, see, before the expiry of term of office, the board is unhappy with the auditor because the auditor is not colluding with them for the fraud. But, or maybe they said they're not doing the work properly or whatever. But in case of 140 subsection 5, the auditor has colluded with the directors. He has also been party to the fraud. Now, the members want to remove him. He said, no, what is this? This fellow should not be there. For all that, there are elaborate procedures. First is removal of auditor before expiry of term. See, the auditor is appointed for 5 years. Before the completion of 5 years, you want to remove him. Okay. For that, it will be invariably board decision. So the board meeting should be held. You have to hold a board meeting to decide about the removal of auditor and then authorizing the filing of application to central government. So basically, the board cannot recommend for removal of an auditor before the expiry of term unless first, before doing that, they make an application to the central government. So first, there should be a board meeting. At the board meeting, they pass a resolution saying this auditor, we should remove him because he is no good, useless. Whatever may be the reasons, you give the reasons why you are not happy, why the effectiveness of the audit is not there, blah, blah, whatever. Then you have to make an application to the central government. CG here is the regional director. And the application is to be made in form ADT 2. Within 30 days of passing of board resolution. Please note the date, number of days, 30 days. So board meeting hai, You decided not to reappoint this guy. You decided to remove this guy, even though he is not completed his term. Within 30 days, you have to make an application in Form ADT. Definitely the CG will call both you and the auditor. After all, you can't just like that go and tell all nonsense about the auditor. The auditor will come. The auditor shall be given a reasonable opportunity of being heard. Maybe that could be dangerous, because if that guy is genuine and he's got valid reservations, he will come and present anything to the regional director. But whatever it is, after seeing your application, giving you an opportunity, and the auditor also an opportunity, the central government will make the approval. Meaning, they will say, go ahead and remove him. But they may also say, no, you can't remove him. Both are possible. In this situation, the regional director in the central government is sitting in a quasi-judicial role. Quasi-judicial role means he is not only an executive functionary, he has to apply his judicial mind. Judicial mind means he should be impartial. He should not say it either way. That order should be a judicial order. See, the judge is impartial now. Usually the judges are, the law itself is symbolized by the scales, the balance, the scales are shown as the symbol of law and justice, right? Means you should be balanced. When the balance is held up, both sides should be equal. One should not go below, other should go high. So that is called judicial function, which means one of the important principles of natural justice is audi alteram partem, meaning the other party should be given a reasonable opportunity of being heard. Friends, that reasonable is a very, very powerful word. In your professional career, please remember, reasonable means that nobody can define what is reasonable, 15 days, 30 days, whatever. But an reasonable opportunity should be given. Because many times, officers will pass orders in hasty manner without giving opportunity. Immediately, we can go and get it quashed in High Court only on the ground that I was not given reasonable opportunity. Okay. For example, a case is supposed to be taken up. It is getting time barred and 31/12. Man takes it up in November 15th. Gives 15 days time. So much data is needed. We are trying to collect. We ask for another 10 days time. I won't care. You are not fit. Like that. And since the ICAI has not produced anything, I hereby assume that the vouchers are not there. Disallow the expense like that. Pause. That order will get quashed in High Court because reasonable opportunity has not been given. Okay, thereafter he has to redo the case. Again, start fresh. Give me enough opportunity to be alert. So this is something this is nothing to do with company law or auditors. This is a general principle that you might want to remember when you are practicing or working in a large company, heading the tax department. Remember, we can always question on reasonableness. Anyway, here after giving all the opportunity, the approval of CG has been received. Thereafter, the auditor's removal can be done only by passing a special resolution. Once again, I'm repeating, the same auditor, when he is reappointed at the AGM, ordinary business, ordinary resolution. At the AGM, when you are appointing a person other than the retiring auditor, special resolution. Removing an auditor before expiry of term, special resolution. Try to remember this. So you will call for a general meeting. At the general meeting, you have to pass a special resolution. This is what 10.18 question. Now I am answering it, sir. It is the special resolution is to be passed. Special resolution passed by the members. Now the auditors to be removed at a general meeting. That special resolution should be passed at a general meeting, not necessarily AGM, because you are going to remove him before expiry of term. So think about it. It's going to be done at a meeting other than AGM. Special business. And you're going to remove him. Therefore, special resolution. Special business, special. This is a combination. But sometimes there could be many special business items for which ordinary is passed resolution. Okay? Yeah. First of all, Srinivasan sir, this topic which we are now discussing, removal of auditor before expiry of term, is not a matter involving special notice. This is just board's decision, goes to the CG, gets the approval, holds a general meeting within 60 days, pass a special resolution, remove the auditor. This is separate. Now, okay, special notice will be there only when you want to appoint a person other than the retiring auditor. You want to appoint some other person, or you want to expressly provide that he shall not be reappointed. This will be done at an AGM. So when you want to appoint a person other than the retiring auditor, or expressly resolve that the retiring auditor shall not be reappointed at an AGM, only then special notice is to be given. So I will tell about it a little more a little later. Removal of auditor is not for public company. Even private company, all companies, if you want to remove the auditor before the expiry of term, go to CG. Private, public, one person, small, listed, unlisted, whatever. This is the procedure common for all companies. Okay. Mr. Sachidanand was appointed as the auditor of Moonshine Limited on 19/9/2019. The company wanted to remove him before the expiry of his term. And for this purpose, the necessary board resolution was passed on 21/2020. So he was appointed on 19/9. Man has already become a nuisance. Man Sachidanand is already nuisance. So they are saying remove him. And therefore they go hold a board meeting, pass a board resolution on 21/2020. Then application is made on 15/2. When should the application be made? When should the application be made? Within 30 days. When was it made? 21. So they have time till 19/2. Or rather, if you count days, then January has 13 days. So 20, don't include 20. Okay, so you 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. 11 days. So balance is 11. Therefore, 19 days. 19th of February, they have time. So on or before 19th February, the application is to be made. Luckily, the application was made on 15/2. That is well within 30 days from the date of passing of the board resolution. Okay. The central government also approved the removal on 3/3/2020. Then the company held its general meeting on 15/5/2020 and passed an ordinary resolution for removal of the auditor. When should the meeting be held? Within 60 days. So 60 days, Anna. So if you count from the date of when? From date of receipt of CG approval. So the CG approval, assuming it was received on 3/3. So for the sake of clarity, it will be 2/4. There is 60 days. Again, 31 days is there. So 2/4, then 3/4. Am I correct? No, 2/4, then 2/5, 3/5. So the meeting was held on 15/5 and passed an ordinary resolution. Is the removal valid? You can count the exact number of days. Okay. So, yes, the removal is not valid as the meeting was held after 60 days and an ordinary resolution was passed. Okay. Now, Mr. Srinivasan, you are raising a very big issue. You are absolutely correct. On page 10.19, it says special notice. What I humbly suggest, no, instead of getting into the controversy now, allow me to teach the subject. Since I am unfortunately the teacher and you are, in this case, unfortunately, a student, allow me to continue. Finish the topic. Thereafter, we will examine 10.19. Is that a good idea? So that instead of getting into this unnecessary, you first understand the topic. Thereafter, if you think, you go to the section also, check up. Then you take your own call on what to do about this. I will explain to you what is special notice, when it is given and all that. If after my teaching, you still feel that whatever you want to do, kindly please go ahead and do it. But allow me to teach you first. Allow me to give the gyan, the knowledge to you. Then this dispute about which is right, which is wrong and all, you take it up, whatever you want. You got my point? Because that way, you will learn the subject first. So neither the Board of Studies material nor my notes is the ultimate authority on the subject. The subject is contained in the BAR Act. Okay. So to an extent, I'm using the BAR Act for my notes. So let me explain to you what the law says. Thereafter, you can tell it is like this year, like that year and all. Definitely. And if you feel whatever you want to do, okay, your choice. I'm after all only the teacher here. I'm not the authority on company law. So you decide what you want to do. But allow me to first teach the subject. What is? Correct. Most of you have got the idea. Now, AB and Associates, a firm of chartered accountants, was reappointed as auditors at the AGM held on 39. However, the board directors recommend the removal by passing a resolution on 31/3/2021. Subsequently, having given consideration to the board recommendation, AB and Associates are removed at the general meeting by passing a resolution. They passed a special resolution, but subject to approval of the central government. What do you think? Explaining the provisions of for removal of second and subsequent auditors. Boss, I seriously don't know what is second and subsequent. Whatever it is, if you want to remove an auditor before the expiry of his term, this is a procedure. Okay. Have they complied with it? No. Because what are they supposed to do? Within 30 days of that board resolution, 31/3, they are supposed to hold a they are supposed to apply to the central government. Get the approval of the central government. And within 60 days from the date of receipt of the order of the central government, they should hold a general meeting and pass a special resolution. They have not done that. Therefore, the approach of the company is wrong. Right? Now, this is special notice. Nenshi Saxena, in an earlier session, long ago, I do not know how long ago, I explained the difference between ordinary and special resolution. Because at that time you needed that knowledge. I think during incorporation itself I covered. Anyway, I will do that now, but we are wasting time, seriously wasting time. This is a very, very fundamental principle that you need to be aware of. You can even refer to it. I have mentioned it very clearly. I gave examples to help you. Or else you do one thing, Nenshi. Hold on. For right now, you are ignorant of ordinary special. Be ignorant. Hold on. Wait for the new year. Inshallah. When I will be there and I will teach you management administration. At that time, I'll teach you thoroughly. Not today. Today, when I say special resolution, you don't know what it is. No problem. Understand it like a bundle. What it is inside, if you want to go and see. But 100% when I teach management administration, I will tell you again. But not Aj. Aj though, there is something called ordinary resolution, simple majority. Something called special resolution, special majority. More. So, ordinary resolution, the number of votes cast in favor should be just more than the number of votes cast against it. Whereas for special resolution, you need a special majority. It's more difficult. That much you understand. What is that special majority? I already mentioned. Again, if I ask now, many of you will tell 3/4, 75%, 2/3, all that you will tell. In spite, I have explained to you what is special resolution. So today, no, right? Unless some other person puts it here. Any other student can put what is special resolution. Any student, you are welcome to type into the query pad and I will read it out. I'll be very happy because then I will know, okay, people remember what I said. Correct. So this is wrong. What they have done is wrong. They have not obtained permission from CG. So CG permission is not post factum. Before removing the auditor, you have to obtain the approval of the central government. Right? See, for that you will call a meeting, general meeting. That general meeting you will call by giving notice. Means a notice will be given. Meeting ka notice will be given. Now, what is special notice? See, first of all, Mr. Srinivasan, since you raised this question, a special notice is a notice given by the members to the company. So, whereas in your 10.19, that notice is being sent by the board to the members. In those circumstances, there is no concept of special notice. It is a notice given by the company to its members for an EGM, extraordinary general meeting. Whereas, if in this law, sir, the law as I have understood it, section 115 talks about special notice, which is there in management administration. When I come there, I will again teach this. So that section says special notice is a notice given by the members to the company. When will it be given? Where any provision in the Companies Act requires special notice, it shall be given in accordance with Rule 23 of the Companies Management and Administration Rules. So, Rule 23 of the Companies Management and Administration Rules 2014 gives the procedure for giving special notice. So, special notice is a notice given by the members to the company. In the context of removal of an auditor before expiry of term of office, there is no reason why the members have to give a special notice. Sir. You understand now? In this context, there is no reason why. See, once the central government approval is received, the board convenes the meeting. So that time, there is no need for a special notice. Okay, 1. 2, it need not be an AGM. Means you are removing him before the expiry of his term of office. Why you will wait for AGM, Baba? You call for an extraordinary general meeting immediately. Means anyway you have to call it within 60 days. So it may not be AGM. So there seems to be some disconnect with the law here. You might want to take your own call, Mr. Srinivasan. If you still feel that, sir, my Bible is here, like then follow that Bible, please go ahead. Please go ahead. But if you think what the law is being taught here as the law, then you will have to accept what I am saying, sir. The choice is yours. I can't argue beyond this. What do you say, Mr. Srinivasan? Okay. Check it out. But forget this, sir. Forget page number 10.19 of the material. Sir, you are going to become a member of my institute. Once you become a member, you cannot quote page 10.19 of the Institute Board of Studies material. What you should be quoting is section 115 of the Companies Act. And that very clearly says that special notice is a notice given by the members to the company. Where any provision in the Act requires special notice, it shall be given in accordance with it. What does it say? Special notice shall be given by such number of members holding not less than 1% of the total voting power. Total voting power means if all the votes, if all the shares are, the votes are given on a poll, how many votes will be there? That is the total voting power. So, on a poll, I'm just again repeating it. I know you should know thoroughly. On a poll, 1 share, 1 vote. If the company has 1 lakh shares, on a poll, if all the votes are cast, whether for or against, how many votes will be cast? 1 lakh. That is the total voting power. Out of that total voting power, members holding not less than 1%. So out of 1 lakh, members holding, it may be even 1 member. It could even be 1 member. So long as that 1 or 2 members or member is holding not less than 1%. Means 1 lakh ka 1% is 1,000. 1,000 shares. Members holding 1,000 shares. If they are out of 1 lakh. Okay. They can give special notice. Suppose the company does not have a share capital, then number of members, 1 man, 1 vote. So if there are 10 people, 1 man can do it. 1%, I'm sorry, if there are 100 people, 1 man can do it. 1% of the vote. So 1% of total voting power or holding shares on which an aggregate sum of not less than 5 lakh has been paid up, whichever is less. So it's either 1% or 5 lakh. Suppose it's a large listed company. You calculate 1% of total voting power. It comes to 50 lakhs. Then, even if those people holding 5 lakh rupees worth of shares, an aggregate sum of not less than 5 lakh has been paid up, meaning face value 5 lakhs. Face value 5 lakhs. Not less than 5 lakhs. Face value can give special notice. Now, this notice is sent by the members to the company not earlier than 3 months, but at least 14 days before the date of the meeting. So, members can send it 3 months ahead also, but at least 14 days before. See, usually special notice will be given only for certain matters. Now, when it's going to happen at the AGM. So, what you will do is you will send a resolution, you will send a notice, knowing when the date will be approximate. So, you will send it. But in case you miss it, you get the AGM notice. You see, then immediately you want to, if you are seeing the list of order, the matters, there you see AB and company auditors being eligible for reappointment or to be reappointed. No, never. AB and company should not become auditor, man. Like that, if you think, then if you are holding not less than 1% of the total voting power or 5 lakh worth of share capital, whichever is paid up value, whichever is less, then you will give special notice. Means you just send a letter to the company saying, the special notice is hereby given that Messrs. AB and company auditors shall not be reappointed. You can also support somebody else. You can say PQR and Co will be appointed. Your choice. That is a special notice. It should be sent 3 months before or at least 14 days. Maximum not earlier than 3 months. At least 14 days before the date of the meeting at which the resolution is to be moved for appointing the auditor or reappointing the auditor. It should be 14 clear days, meaning not including the date on which the notice is given and the day of the meeting. So suppose you're sending an email, special notice can be sent by email. So sending an email, then the date of the email should be ignored. From the next day, you have to count 14. Stop. Then that next day or later should be the AG or the meeting. So the gap should be exactly 14 clear days, not including date of notice, not including date of meeting. Okay. In between, you should have. When we come to management and administration, I will again tell this. Okay, why I am covering here? Because the next point needs this awareness of special notice. The company shall immediately after the receipt of the notice give its members notice of the resolution at least 7 days before the meeting. So now the company would have given notice to the members. Later on, you will study this 21 days before. 21 clear days before, the company would have given notice. 14 clear days before special notice is received. Now, 7 days before the meeting, the company should send a notice to the members, right? Clearly informing them, so and so special notice has come. This will be considered at the next forthcoming general meeting or annual general meeting. Maybe this was received 14 clear days before, but still the company feels it is not practicable to send it to every member. Therefore, they can have it published in 2 newspapers, one in English and one in vernacular. Vernacular means the language of the local region. Why vernacular? Because as I already told you, not everybody may be fluent in English or in Hindi. Like there may be people like me, neither Hindi understand, neither English. What will they do? For them, it will be in the local language of the region. That is called vernacular. So that language also you have to publish the notice so that it becomes a public notice. Once it is done, at the time of meeting, you will take up this item. That's all. When the appointment of auditor comes up, the chairman will say, we are proposing to appoint AB and company. Incidentally, we have received a special notice from members that PQR and Co can be appointed and not AB and Co. Both the matters are put before the meeting. Kindly, take it up like that. Okay, kindly take it up. The matter will be put to vote in that. Now, be careful. Be careful. If you are going to appoint AB and Co, ordinary resolution is enough. But to appoint PQR, you need special resolution. Why? Because you are going to appoint a person other than the retiring auditor. Or you are going to expressly resolve that AB and Co shall not be reappointed. That requires special resolution. But if you are simply going to reappoint the existing auditor, no need for special resolution. Okay. So this is the point you have to understand. So this is how it's. So appointing a person other than the retiring auditor, special notice is to be given. For special notice is required only for appointing an auditor other than the retiring auditor or expressly resolving that retiring auditor shall not be reappointed. Sir, 140 subsection 4 read with section 115 read with rule 24, not rule 24, and rule 24, not 23. 24, kindly bear with me. See, Srinivasan ji, it is not about nothing. Please don't use big words like apology and all. What I want these new students to realize is there is a knowledge base beyond the material. And that knowledge base is contained in the Bare Act. So, while your reliance on this document is very important and relevant, I still would suggest that once there is a doubt, once you have a problem, have the ability to go to a bigger source of knowledge which is more concrete and undeniable. That is all I'm asking you to. The mindset should go beyond the student mindset. It should go to professional mindset. See, when I am going to appear before the income tax officers or any government officer, I would not rely on any book or on any textbook or on any author, except possibly in rare cases, some very, very, very renowned authors like Vinod K. Singhania. Otherwise, I would not refer to some books and all that, because books can be wrong, whereas the Bare Act cannot be wrong. So I will download the exact section, rule, etc., and I will read thoroughly, and I will make my own notes. Then I will go to the taxman and I will go through the research. I will see what are all the case laws available. Then I will form my own opinion. So if you can pick up this methodology now, it may not be relevant for intermediate, but when you come to final level, definitely this mindset is more important. That reliance on one document and always using that as the North Pole and saying it is in this, what do you say, it is in that. Sorry, nothing can be done. That is all I was trying to say. Please don't take me otherwise. The intention is not to say that you did something wrong, but to ask you to go beyond it. And one, two, allow me to complete the topic. Only then I can tell now. So, and what you are saying is correct. I find that on page number 10.19, for removal of auditor before the expiry, it does use the word special notice and it uses the word AGM. Anyway, let me also do some verification once more and get back. But as of now, this is it. So now, special notice is given. Company shall give notice to members at least 7 days before meeting. Then company shall forthwith send a copy thereof to the retiring auditor. Why? Because he has to be given an opportunity. Same principle. After all, you are going to remove him. These members are saying remove him. So that guy should be given an opportunity. Now, hey, they are saying they want to remove you. So he can give his representations. And those representations should be circulated to the members. And then, in case it is too late, then that retiring auditor shall have the right to have it read out at the meeting. Okay? In addition to that, he has the right to talk. Okay? He can also address the meeting. Without prejudice, he can address the meeting. Whatever it is, if the representations sent are not, or they are derogatory or slanderous or libelous, then the tribunal on an application may say no need to circulate, because he is only giving needless publicity to a defamatory matter. The rights conferred on this auditor have been abused by him, meaning he is given an opportunity to say why he should not be removed. For that, you should say, see, I discovered a fraud. The directors are aware of it. Therefore, they are trying to remove me like that. But that point in time, if he keeps on repeating, MD is a fraud, he is a rogue like that, no. Don't abuse this right to make slanderous statements about people. If so, then who will decide it? The tribunal will decide by looking at the application. Okay, sir. This 140 subsection 4 is there in the section. Now, how many times this will happen in real life? Very rarely. Probability of appointing somebody other than the retiring auditor at AGM, very rare. Means I would take the risk and say never, but I'm not, because there might be 1 or 2 cases where they have done it. Otherwise, what will happen is the board of directors itself will go to the auditor and say, sir, it's like this, please understand, kindly resign. So he will resign, and they will, at the next AGM, they will appoint somebody else. This is the more professional and decent way of doing it rather than infertility. Okay. But I'm not saying The provision is there. If any member wants to use it, they can. To remove the auditor, they can. For example, some bad news has come about an auditor, known that he's been collusively fraudulent in some other case and he has been arrested. Then some members may feel, why should such a person be our auditor? Like, okay. Mr. Nityanand. See, I think today we are all into Ananda. Am I correct? Sachidananda. Now Nityananda. Nityananda, don't confuse this Nityananda with another Nityananda. No. Mr. Nityananda is the current auditor of Messrs. Delight Food Products Limited. He is retiring at the next AGM when he would be completing 2 terms since his first appointment. Nityanand, individual, no problem. He is completing 2 terms. The company has a paid up capital of 5 lakhs consisting of 50,000 shares of rupees 10 each. Members holding 700 shares. 700 shares, right, have sent a special notice in accordance with section 115, proposing specifically that Mr. Nityanand shall not be reappointed. So the board complied with section 115. Got it? They complied with section 115. The notice, special notice was received from 700 members within not less than 7 clear days before that, sent to all the members. AGM was held. Nityanand was not reappointed. Members have appointed Mr. Brahmanand. Obviously, Brahmanand would have been appointed by passing a special resolution. Brahmanand would have been appointed passing a special resolution. Now, Mr. Nityanand claims automatic reappointment. Can he claim under section 139? See, this is the provision. Can he claim? Normally, he'll be automatically reappointed. Where at any AGM, no auditor is appointed or reappointed, the existing auditors continue. But suppose a special resolution is passed appointing some other auditor, then no, he cannot claim automatic reappointment. The provision has been complied with, right? The special notice was received. 700 members, you need only 1%, meaning 5 paid up capital 5 lakh, 50,000 shares. So 1% is only 1% is only 500. Am I correct? 1% is only 500. Whereas I've got 700 shares. 700 shares, 5 lakh rupees. Company has a paid up capital of 5 lakh. Whereas I've received from 700, which is more than 1% of the paid up capital. Whichever is less, 5 lakh or 1% of the paid up capital, whichever is less. Not less than 1% of total voting power or 5 lakh paid up capital, whichever is less. So here 700 is no problem. Notice was given. So the argument given by Mr. Nityanand is not valid. Okay. Now, last situation. We have seen removal of auditor before the expiry of term of office. We have seen removal of auditor, or rather appointment of a person other than the retiring auditor, or expressly resolving that the retiring auditor shall not be reappointed. Okay. Now, last, removal of auditor in case of fraud. That is, fraud by the auditor is one thing. Where the auditor is acting in a fraudulent manner or abetted or colluded in any fraud. Abetting means when a crime is being committed, somebody may not commit that crime, but they will support it, abet it, be supportive in it. That's called abetting. Colluding means you sort of agree with that person. So the board of directors say, we are going to do this fraud, Mr. Auditor. You do like this. You sign the balance sheet. Auditor agrees. This is called collusive fraud. Again, this is classic Satyam ka reaction. Because this is exactly what the auditor was accused of in Satyam. That he acted in a fraudulent manner and he abetted or colluded in Satyam fraud by signing the balance sheet, which is wrong. Of course, he might have had his own defenses to say, I honestly believed, I never knew this, I'm not aware of anything like that. And all he can say, how can a senior auditor not be aware of such a deep-laid fraud? Sorry, we are like that. I was ignorant. The entire firm was ignorant. Nobody knew anything. Still, finally, if the tribunal is satisfied that the auditor has acted directly or indirectly in a fraudulent manner or colluded in any fraud, then the tribunal can direct the company to change its auditors. The removed auditor shall not be eligible to be reappointed as auditor for any company for 5 years. And he will also be liable for action under section 447, fraud. Okay, where he will be paying huge penalty. Right? Now, when can the tribunal do this? 3 situations. Suo motu, on its own motion, by coming to know about something, it can call for a hearing, but rarely will they do it suo motu. So it will be basically on application by central government. But in that case, the tribunal should be satisfied within 15 days of application. Then it shall immediately order that he shall not function as auditor, and CG may appoint another auditor. So the CG will also move the tribunal and say, please don't allow him to continue. He'll destroy the records. So he shall not function as auditor, and we will appoint another auditor to take control of the situation. Any other person concerned can also make an application to the tribunal. For example, creditors, bank, even shareholders can make an application. Whatever it is, once the tribunal passes an order, auditor shall be removed. So this is removal of auditor by order of tribunal. Okay. Please note, when you want to remove him before the expiry of his term of office, you went to the central government, which is regional director. But here, in case of fraud, even the CG cannot take a call. They only make an application to tribunal. Tribunal hears the case and finally passes the order. This is an escape valve. This is a redundant provision, but it is there to protect. Another Satyam should not happen. So even if the central government has a doubt that there is some Satyam type of fraud happening, immediately they might go to the tribunal and say, call the auditor. We feel that the auditor is doing some collusion, fraud. Then they will direct to be removed and the investigation will start. Now, in case it's the firm and not a single auditor, then the liability shall be of the firm and that of every partner or partners who acted in a fraudulent manner. So, whatever assets belong to the firm can be attached for the penalty, etc. Any partner or partners who acted in fraudulent manner or abetted or colluded, their assets can be attached personally. But other partners who are not aware, who are not involved, they will not be affected. They will be safe. But this kind of protection for other partners. Okay. Now, so this provision is without prejudice to any action under the provisions of this act or any other law for the time being enforced. So this is only to remove the auditor and without prejudice, means this is in addition to other provisions for punishing the auditor and all. We'll be seeing now. In addition to that, if the tribunal passes an order that the auditor cannot be appointed for 5 years and will be liable for punishment under section 447, which includes imprisonment also. Believe me, minimum. So you have to be very, very careful. Collusive fraud, now they are frowning. In fact, later on, maybe when you come to investigation and all, in final, when you're studying on your own, you'll find there's serious fraud investigation office. That is one more Satyam Mandan ka product, that serious fraud investigation office. Got its muscles. So another time Satyam cannot happen. Okay. The provision states 1% or 5 lakh capital, not less than 1%. Whichever is less. That is 1% of total voting power or 5 lakh. So here the total capital itself is 5 lakh. So 1% is 500 shares. So members holding 500 shares can make an application. See, this company has a paid up capital of 5 lakh. So all the shareholders together are having 5 lakh. How you can have shareholders holding 5 lakhs? Members holding shares on which aggregate sum. That means everybody should apply. That is why they have said, please listen to me, sir, Nagarajuji, please listen to me. Members holding not less than 1% of total voting power or on which an aggregate sum of not less than 5 lakh, whichever is less. It is to be understood, whichever is less. Here, 5 lakh shares is high. The entire capital is 5 lakhs. So we have to consider members holding 1% of the total voting power. That means out of 50,000 shares, they hold 500 shares. That means minimum they should pay. So 5,000, enough. But here we are having 700 shares, which is more than. So whichever is less, I think possibly used. Okay. Even though capital less than 5 lakh, auditor cannot be. I hope now the clarity has come to you, Nagaraju. Okay. Now we have another Ananda, Ramananda, the auditor of fly-by-night operators. Even the name is very funny, na? Fly-by-night operators limited discovers that the directors have quietly siphoned away the funds of the company through false bills and unauthorized fund transfers. So this fellow is auditing. He finds all this. He says, sir, these bills are not, these payments are not supported by bills. Moreover, you have transferred 10 lakhs, 20 lakhs to your account. What is the reason? He sends a note, audit note by mail. He creates the thing. They tell him, Mr. Parmanand, come, let's go to the evening. We'll go for a dinner. See, this is what life is all about. You are a young man. Do whatever. Do something. Ignore it. Say that you saw everything. Everything is correct. So he says, okay, sir, I'll do it. Because he also needs the audit. No? So he says, okay. He colludes with the directors and issues a clean audit report for the year ended 31st March 2019. Now, examine the legal consequence. Legally, Paramanand can be removed by application to the tribunal. Suppose some members, other than the fraudulent people, they know that this is happening. They can make an application to the tribunal. Tribunal can call Paramanand and literally do a thorough investigation of his audit. Then they will ask him, what have you done? Why have you not seen all this? What is this? So they will say, remove him. And that's it. So that such a thing is possible. In case a member wants to remove an auditor during his term, then will the auditor give special notice or just? Ritoji, you are confusing me. Why will the auditor give special notice? Please redraft your question. I will answer it after reading the slide again. Special notice is given by the members to the company. So auditor does not give special. Company means board of directors does not give special notice. Auditor does not give special notice. Auditor only makes representations. It is only the members who can give special notice. So what is your question now? In case a member wants to remove, you want to remove an auditor during his term, you cannot. During his term, if you want to remove, then only board has to pass a resolution. Board has to pass a resolution during his term, if you want to remove. But what that member should do now, he should wait for AGM. When that next AGM, now this fellow will come up for reappointment. Now, 5 years down the line, he'll come up for reappointment. Now, at that time, the members who want to remove him can give special notice in accordance with this provision. Then the company will send it to the auditor, auditor will give presentation. Then at the meeting, the auditor, if you have sufficient majority, remove him. Who can prevent you? Pass a special resolution, remove him. So this is how it will be done. Tell the board to pass out. Now 140 is the wider section. You be clear which subsection. 140, 3 subsections are there. 1, 4, 5. So, correct. Many Ananda in my bed. That's just for fun. Because when I was preparing this PPT now, at that time I was listening to one Swamiji lecture. So that was one Ananda. So like that, I thought everybody should become Ananda in this. Okay. So Paramanand. The ultimate Paramanand. So I think even after you corrected, I have answered your question, Najib. You got it now. Siphoned means fraudulently withdrawn. Siphon. See, I put a small hole in your petrol tank, and I siphon. I take over the petrol. Steal. So siphon in this context, in this context, it means steal. Steal the funds means take it away. Unauthorized manner. Okay. suo motu on its own motion means by itself. Means even without an application by central government or any person on its own motion by itself, it can do it. Okay. Yeah, Ananta Ananta. Ananta Ananta Ananta. Ananta Anta is ending. Ananta is no ending. Ananta Ananda is happiness without ending. Okay. Now we come to resignation. When an auditor resigns, there is a casual vacancy. That casual vacancy can be filled only by recommendation by the board, but it has to be approved by the members within 3 months. That is procedure. Here, there is a duty for the resigned auditor also. Okay. The auditor has to file Form ADT 3 within 30 days. The auditor should file Form ADT 3 within 30 days, clearly telling why he resigned. See, this is again a kind of a yearly warning mechanism. When suppose they frighten that auditor and make him resign. Even now, the central government gives him one more chance before in his resignation. He might have said, but in the Form ADT 3, he can say, due to serious misgivings about the accounts, but again, no auditor will have the guts to do that in ADT 3. He will quietly resign and run away. That's all. Okay. In case of a government company, the auditor should file Form ADT 3 with the Controller and Auditor General, company, and registrar. He will send 3 copies ADT 3, upload it to the MCA website, send a copy to CAG, send a copy to the company, and of course, upload it into the MCA site. In the case of other than government company, he will upload it in the MCA's portal, which is filing with the registrar, and then send a copy to the company. Okay. ADT 3 is very, very important. If you, as an auditor, we have to file Form ADT 3 when you resign. Because if you don't do that, there's a penal liability. If an auditor does not comply with the provisions relating to resignation, he or it shall be liable to penalty of 50,000 rupees or an amount equal to the remuneration, whichever is less. See, the idea is you resign because you don't want to sign. You have serious misgivings about the books. But the company says that don't make a big issue, sir, just resign and go. So you don't file ADT 3, you keep quiet. Then you are liable to penalty of 50,000 rupees or an amount equal to the remuneration auditor, whichever is less. And in case of continuing failure, further penalty of 500 rupees for each day, up to 2 lakhs, maximum 2 lakhs. Okay. Now, earlier it was 5, now it is 2. Okay, sir. So this is penalty for not filing. So whatever if you resign, first thing you file ADT 3 within 30 days. Why waste? For somebody, we should be paying penalty. Yeah. Remuneration will be fixed by the company in general meeting. In case of first auditor only, the board is appointing. So the board will fix the. What is filed with CAG? If the controller and auditor general is there, for a government company, who appointed the auditor? For the government company, who appointed the auditor? The controller and auditor general. You have to go to his office and file. Filing, you don't know. You go to the office of that guy and there will be a tapal section. When you just go give your letter, they will take it, acknowledge in your send it back. You send your office by, you do it. And it's called filing. Similarly, you have to send it. If you don't want to file, then you send it by registered post. Okay. As far as registrar is concerned, filing means uploading into the MCA portal. Upload the form. That will be what you should do is upload the form into the registrar's website, MCA website, then print it out, digitally signed. It doesn't need any more signature. It is digitally signed. Print it out, 2 copies, send one to the CAG, send one to the company, registered post. Be safe. Send it by courier or registered post with proof of acknowledgement of delivery. That's it. You are safe. See, my suggestion to you, if use email. Email is the best, where there's no need for proof because the email records the date and time. So there's no need for a separate register. But if you're sending by post, then have a separate register. Yeah. Better to have a separate register in your office for outgoing and incoming. Similarly, they will have a register for incoming and outgoing tapal. Yes, Mr. Nagaraju is correct. Last remuneration. For this only, we are doing all this. Correct. Again, there is the Companies Act does not fix any remuneration based on anything. It is up to the auditor to charge and the client to pay. But the amount will be fixed by the company in general meeting for subsequent. First auditor fixed by the board. Remuneration should include facilities and expenses incurred for audit, meaning audit fee will be something. In addition to that, the boarding, lodging, dining, all the expenses we are spending for the auditor should be clearly mentioned. See, idea is many times auditors will be entertained lavishly. And, that is one way of softening up like that. So they want to know how much are you spending? What is the fee? Fee is only 50 lakhs, 10 lakhs, 20 lakhs. But other expenses, 1 crore. What did you do for that day? Fees itself is only 20 lakhs. You spent for him so much. No. Other than travel, hotel expenses, and whatever it is, you have to disclose it clearly. What is the fee? What is the travel and other expenses incurred for the audit? Also, you should include fees earned for any services offered at the request of the company. So this should be disclosed in the balance sheet. Next time when you're seeing the annual report, you'll see audit fees. There you will have a note. Very clearly they'll mention what is the audit fee, what is the expenses incurred, and also what is the other fees for other services like tax audit, certification fees, and all that come separately. Okay. Now we move on from appointment, resignation, removal, etc. And of course, as rightly said, remuneration to powers and duties of auditors. Okay. Power to access to books of account at all times. Okay. Don't take this at all times very seriously. You can't go at midnight and ask for the books. But you have the right of access at all reasonable times. Meaning they cannot say audit can be done only in August. Don't come now. When you want to go, you can go. When you want to see, you can see. You have the right. Whether kept at the registry office or at any other place. Okay. In fact, many times I insist. I tell them, boss, you are saying that you are having such and such a factory in such and such a place in Gandhidham. I don't believe you. How do I know such a factory is there? I want to go and see the records. I go and see. I'm entitled to see. I'll go and see. Okay. I've done it many times. Okay. Because, see, auditing, you have to be very, very doubtful. The minute you are getting into an auditing mode now, your belief system should stop. Your verification system should start. You are not here to believe. You are not going to be paid you are not paid to believe. You are paid to verify. Even though the company pays your remuneration, you are representing the shareholders. It is not the MD who is paying your fees. It is the shareholders who are paying. This fellow is only taking their money and giving it to you. He's not doing some charity to you. So you don't have to be obliged to him or fall at his feet. It's just that he is the head, that's all. But whose money is taking, boss? It's taking the shareholders' money. So you are the person who is going to protect the public interest. Your role as an auditor is something totally different. You are not the servant of the board of directors. You are the representative of the shareholders. You are entitled to have necessary information and explanation. Friends, books of account are given to us. Entry is there in the ledger towards expenses, towards traveling. One number. Say, what expenses are? So they give you the vouchers. So you are getting flight ticket. Director, Mrs. Director have traveled. Chalo, correct. It's a flight ticket is there in the name of the company, paid by the company. Vouchers are there. Authorization is there. Everything. But next question I'm asking, why did they travel? For what did they travel? I can ask. Information explanation. What is the business case for that? Was it a personal expense or was it a business expense? I can ask. Why? Because later I have to qualify, boss, that if any personal expense has been incurred, I have to qualify. So I am entitled to ask. They can't say, no, please don't ask questions like that. It is some private affair. Why what private affair? You are running a company now. Sure, like that. Okay. Then access to record of all its subsidiaries. Okay. So in case the company has subsidiaries, the auditor of a company which is a holding company shall have the right of access to the record of its subsidiaries and associate companies. Be careful. I have highlighted it very clearly. You are having access to the record of subsidiaries and associate insofar as it relates to consolidation. See, we already saw in accounts now, the subsidiaries and associate companies have to be consolidated. So far as consolidation has to be done, the auditor of a company has the right to look at the books of account of the subsidiaries. In addition to that, see this part of the topic now, I can go a little fast. Why? Because the same words, the same thing you will study in auditing also. Means in the section 143.1, the auditor shall inquire into the following matters. Whether loans and advances made by the company on the basis of security have been properly secured and whether the terms are prejudicial or to the interest of the company. Means loans are given to some known people without taking proper security, but shown as if they are secured. Then you have to verify whether there is a proper security. Whether the transactions of the company which are represented merely by book entries are prejudicial to the interest of the company. See, when there is a bank transaction, I can verify it. I can get a third-party confirmation. Wherever a third party is involved, even whether a purchase, I can verify a purchase bill. Sales, I can verify the payment. But if the entire entry is book entry, then is it prejudicial to the interest of the company? For example, in the case of one company, they took the revaluation reserve. They revalued the asset. They took the revaluation reserve and transferred it to reserves. That is, they transferred it to share capital. They issued bonus shares. They said, hey, you can't do this. So they passed on entry. Share capital account data to revaluation reserve. Hey, you can't do that. Yeah. No, sir. We are allowed to do like that. Some opinion gives us. No. Revaluation reserve cannot be used for issuing bonus shares. So book entries, if they are there, whether what are you doing here? Like that. Where the company not being an investment company or a banking company, okay, so whether so much of the assets of the company has consist of shares, debentures, and other securities. Simple, boss. You are not an investment company. You are not a banking company. In your balance sheet, shares are being shown as assets. Debentures are there. It will be shown under non-current investments or current investments in the balance sheet. You are having that. You are not an investment company, meaning your main business is not buying and selling shares or holding shares. Your main business is not banking services. You are a non-banking company, non-finance company. Not an investment company. Such a company is having shares on its balance sheet. And in that year, it is showing that some shares have been sold at a price less than that at which they were purchased. You are selling shares at a loss. For what? What is the justification? Need. See, my dear friends, one thing. All these matters are inquiry. That is only asked. There is no reporting requirement. Okay, there is no reporting requirement. Okay. Whether you just have to ask, you ask that question. Tomorrow, if anything is discovered, they will ask you, have you asked? How to prove? There should be a questionnaire which should be given to the CFO and the directors. They should give a management presentation saying clearly, we hereby confirm that blah, blah, blah. Also, you should verify. Maybe if you found something, you should ask them, what is this? That should also be documented. So the inquiry should be documented. Okay. Whether loans and advances made by the company have been shown as deposits. Friends, somehow the word deposits has a good feeling. For example, bank deposit like that. So you are given a loan you are given a loan to Dubakur Limited. Now, instead of showing it as a loan, you show it as an intercorporate deposit like that. No. If it's a loan, show it as a loan. That is okay. Okay. Whether personal expenses have been charged to revenue account. Now you got the point. So What is this personal? Because I'm bound to make an inquiry, boss. Statutorily bound. I have to ask. You don't interfere in my personal business. What to do? You have made your personal affairs into public affair. Whose fault is that? Okay. You do one thing, you take it out as remuneration, spent from your bank account. How can I ask? Since you are booking it in the company only, I'm asking you. Where it is stated in the books and documents of the company that any shares have been allotted for cash, whether cash has actually been received. This happened for me in one case. Only one case in my life I've seen, where almost similar to Tobacco Limited, that to promoter, every day there will be cash receipt entry in the books. Every day allotment of share will be done. Next day expenses will be shown, bogus. Like that, he booked about 1 crore and he allotted himself shares. Cash has not come, expenses has not been incurred, but shares are allotted and preliminary expenses will be shown. 1 crore preliminary expenses or other expenses will be there and 1 crore share capital. P&L debit, 1 crore. In those days, you had the advantage of showing it on the asset side as fictitious asset. Today, this fellow, if he's doing such things, it will come as a negative item on the liability side of the balance sheet. So it may not have a great idea, but in those days it worked. Man created 1 crore. Based on that, he got 5 crore from other people. Say, I have invested 1 crore. No, you bring 5 crore like that. So such cases are there. So if so, you have to ask, say, is it so like that? In fact, this matter I qualified in that balance sheet. Not now. It was in 1990. 1992 or so. I qualified this. I qualified 16 qualifications. Caro 13 qualifications in Caro. Every item in Caro was qualified. Because the tribunal, then at that time it was CLB, they said somehow you have to complete this audit and issue an audit report. So I appeared and I said, sir, the books of account on I'll give a disclaimer. No, don't give a disclaimer. So we made them to prepare a set of accounts with whatever was available. We went through an audit. Everything is out. So we qualified 16 items in Caro, totally. 13 in Caro. And we issued at the time it was not called Caro. It was called Mao Caro. Manufacturing and other companies' auditors report order, which we qualified. 1984, Mao Caro was there. Then we got amended. Now it is called Caro, Companies Auditors Report Order. Something changes and all are happening now. You people are, I'm sure, more knowledgeable than me on all that. You should be. You're all have to write the exam now. The auditor, while making the report, shall take into account the provisions of the Act. Okay, the accounting and auditing standards, matters which are required to be included in the audit report and all that. Okay, and see, this part of it is fairly easy, man. Let us little bit skip here. You have to express your opinion. This is all part of auditing, Baba. You will learn it again in auditing. Exact same thing will come in auditing. According to him, to the best of his information and knowledge, whether the said accounts, financial statement, have given a true and fair view of the state of the company's affairs as at the end of the financial year, and profit loss and cash flow for the year and all that. True and fair view. Only 5 purposes for RRR. So don't use abbreviation, ma. I'm not able to understand. See, I don't have that much speed of understanding like you all. I'm Buddha, hai na? So kindly give me the full expansion. Sometimes I look very foolish. When you write RR, what is RR? Only 5 purposes for RR. Other work not use. Oh, you mean revaluation reserve? Oh, mama, 5 purposes. Hello? What 5 purposes? It cannot be used for anything. Hello? You mean revaluation reserve? It cannot be touched. Ms. Divya Kumari, please, have you understood? RR means revaluation reserve, na? If so, it cannot be touched. I think you are confusing this with securities premium. Am I correct? You are confusing this RR with security premium. For that 5. Out of that, only 2, 3 are there for listed companies and certain other classes of companies. Okay, now, there is no real company called Dubakur, nothing. It's just as a fun name I'm giving you. This is a fictitious company mentioned only by me. Instantly, Auditors Limited is also fictitious. In some of my case studies, I might have mentioned Auditors Industries Limited. It is purely fictitious, does not resemble any company existing or the promoters, nobody, nothing. It is a work of fiction. No, it does not refer to any casual resemblance to any existing people is absolutely accident. That's what I think. RR is basically SP. Okay, to use your own abbreviated way of talking, I think you are confusing with SP or SPA. Okay. Chalo. Now, in addition to that, in the report, you should say, I have sought all and obtained all the information needed. Best of your knowledge and belief are necessary. See, this is what Satyam Auditor said. I got all, but my knowledge is less. What to do? Like that, he told. To the best of my knowledge only I can get. I am not having knowledge, how to ask. That is the problem. What to do? Whether in his opinion, proper books of account as required by law have been kept by the company. Okay, proper returns. See, these are all standard. They are ensuring that tomorrow a fraudulent auditor cannot go back and say, where have I said? Like that. Here you have said, you said proper books. Is this proper books? Showing boosted sales is proper books. And without supporting document, you will see. It's called proper books. And you will audit it, is it? Like that. And proper returns adequate for the purpose of his audit have been received from branches. See, there may be branches not visited. So for those branches, summarized information should be sent to him. Because, friends, again, be careful. We'll be seeing branch audit. Branch auditor responsible for the branch audit. But finally, after his views have been considered by the final central auditor or the statutory auditor, once it merges there, the statutory auditor becomes liable. So you have to see everything. That is why if you want to visit the branch, you can. But generally, when there are too many branches, they say, let's have branch auditor, let him send it. If I have serious doubt, I will contact. Whether the company's balance sheet and P&L are in agreement with the books of account and returns. Wow, beautiful. Whether in his opinion, the financial statements comply with the accounting standards. See, the D point, no, I'm reminded of one funny thing, that there was one case where, that income tax survey was there. And when they were doing the survey, they were, let me see what the time is. 1 second. Okay. The survey was there. They were doing this. At the time, one of the inspectors said, he took a tally printout from tally. See, tally ka printout, there will be on balance sheet. But it is not as per account, your schedule 3. So for schedule 3 purposes, you would have netted off many things. We would have combined many things and all that. So definitely the tally ka balance sheet will not tally with the printed balance sheet, audited balance sheet. This fellow went and he took the tally printout and he took the balance sheet of the company on that day. Sir, total fraud. It's not telling like. Then we took him aside and we showed him, boss, see, these are the notes. These accounts have been summarized. This has been netted off. So that is why it is like this. So that is okay. So long as the certified balance sheet should tally with the books of account. The observations or comments of the auditors on financial transactions or matters which may have adverse effect on the functioning. So these are called qualifications. Also, I told you, you have to report whether any director is disqualified from being appointed as director. This 164.2 is not in your syllabus. You will study it when you come to final. Directors, appointment of director, disqualification. So if a company has not filed its annual return and financial statement for 3 consecutive financial years, or if it has failed to pay, the debentures or pay dividend or deposits for within 1 year from the due date. So 3 consecutive years, they have not filed financial statement, annual return, or for they have not paid the dividend or something, there's a failure. Any one condition, if it is there, then the directors of that company will be disqualified from being appointed or reappointed in any other company. In any other company. So you are the auditor here now. So here you have to verify whether the 3 years financial statement has been filed, whether dividend has been paid, everything is there. Then you will say, no director of this company is disqualified because this company has paid. Like that, if all the auditors of all the companies certify, then no problem. So the ministry will keep track whether such a disqualification is there for any company. Then they will take those companies And see wherever these fellow is a director, they'll catch him. Okay. Also, any qualification or reservation or adverse mark where the company has adequate internal financial controls with reference to financial statements. See, the preparation of financial statement itself needs internal control. Whether such a control is there. So this is a very new item. Please note, I is not very old. It is included very recently, etc. Now, where any matter is answered in negative, the auditor's report shall state the reason for the same, right? Also, they say such other matters as prescribed. This is how they prescribe CARO, right? No, so CARO is also there, and you see this comment about the internal financial controls. Now, it was made applicable on or after 1/4/2015. But what they said, after that it became compulsory. Before that, no. Only for the year beginning on or after 1/4. That is, first year end would be 31/3/2016 only. But they said any period commencing on or after 1st April and ending on or before 31st March 2015. That is 14-15 financial year. Also, if you want, you can voluntarily include like that. Something. But now everybody has to certify. This I, 143(3)(I), for a private company, it is exempted, provided that it is an OPC or a small company, or if it has a turnover of less than 50 crore, or its aggregate borrowing from banks, financial institutions, etc., at any point of time during the financial year, not on the balance sheet date, any point during the year, should be less than 25 crore. If during the year they have borrowed more than 25 crore, even on one day and it was repaid on 31st March, before 31st March, still they have to report 143(3)(I), right? If they are satisfying these criteria, private company is exempted from 143(3)(I). Only if it satisfies these criteria, right? Now, the auditor's report shall also include additional views. See, as and when the Ministry of Corporate Affairs feels something has to be reported, they'll give prescribing. So, impact of any pending litigation. Suppose there is any, see, all are knee-jerk. They would have come across one case where there was a huge pending litigation, not provided or not disclosed in, the contingent liability. Immediately make it compulsory. Plus, one auditor did not do it, catch him. Everybody, because we'll anyway disclose it. 100% I'll go through all the litigation. I will see whether it has to be provided for or else contingent liability. It's part of my audit program. It has to be done. Okay. Anyway, so they are alerting you, do it. Has made provision as required under any law or accounting standard for material foreseeable losses on long-term contracts, including derivative. See, where the company is engaged in, say, some long-term project, and today itself we know that if this project, if you complete it, you will lose money. You have to make a provision for those material foreseeable losses, whether on long-term contracts. So it could happen, boss. See, you bid for a tender, in all fairness, suddenly raw material cost goes up, but you agreed on the particular rate. Now, nothing can be done. You have to complete. Otherwise, the liquidated damages will be more than what you lose here. So you pray to God that the price should come down again, and you buy and somehow complete the project. But still, you will know that you will lose 5%, 10%. Where you thought you are going to make 20%, you are going to lose 5%. That loss should be provided now, knowing. Okay. The company has delayed in transferring amounts required to be transferred to the IEPF. See, if you study declaration of dividend, you would remember on the expiry of 7 years, that unpaid, unclaimed dividend now should be transferred to IEPF. Also, certain other matters have to transfer to IEPF. That money, if it is not transferred, auditor should mention in the report. Similarly, when the demonetization came now, for that period alone, the auditor was supposed to disclose the holding and dealing in specified banknotes. So on 31st March of, I think, 17 March, must have been 17 December, no? So 18 March. When we certified, we had to ensure that we made a note of SBN, how much SBN were being held on that date, and what happened with it. Okay. So every auditor shall comply with the audit standards. These standards will be prescribed by the NFRA in consultation with the ICAI, recommended by ICAI. Okay. Until such time, the NFRA is, giving no auditing standards, ICAI standard will be applicable. So nothing. Similarly, there is a CARO. Because recently 2020 CARO was completely revamped. I have not mentioned it here. But anyway, you will be studying it in your, what is that, auditing. So here, chances are you will not be tested on CARO here. You will not be tested on CARO here. Okay, in this part. You will not be tested. So don't worry too much about CARO here, because CARO is a subject by itself. The company's auditor's report order is a subject by itself. Every item you should know as part of auditing, how to disclose, how to certify, everything should be told. Okay. Chalo. Now, so as I mentioned, the MCA has come out with a new CARO 2020 from 2019-20. Again, it was amended and then deferred because of pandemic and all that. And as of now, it is applicable. The new CARO is now applicable. 2022 onwards became applicable. Okay. 22-23 onwards, it became applicable. Chalo. Let me see if you, I think a small break for 5 minutes, small break. Okay. Very small break. Okay. 5 minutes. Welcome back from your, I hope, well-deserved break, because I also needed a break. And so let's move on. See, this provision relates to reporting of fraud by auditors. Earlier, we saw removal of an auditor because he colluded in fraud. Am I correct? Like our Parmanand. That fellow, he found fraud, but colluded. He agreed to support the management, abetting. So he can be removed. Either central government applies, etc., etc. But you and I are honorable people. So you are an auditor auditing the company, and you find that there is a fraud. See, the discovery of fraud by an auditor is not compulsory. This is something I want to make, because very clearly it has been stated in those days, in a very old case, Kingston Cotton Mills Company Limited case, where the court said auditor is a watchdog, not a bloodhound. It is not his job to discover fraud. But today it has changed. Later on, Panorama Development was a Selston Fountain Pen Company. Clearly, Lord Denning said, no. Auditor may not be a bloodhound, but if a reasonable scrutiny should have shown him that the situation is so obvious that there is a fraud, he should not fail to investigate. When it is so obvious, when something is so clear, see, something is going wrong here. There is something rotten in the country of Denmark. Something. You should know something is wrong. Then you have to really go there and verify. So the duty of an auditor, not to discover fraud, but to, if he comes across a fraud, he should not keep quiet. So what they say is, in the course of the performance of his duties as auditor, he has reasons to believe that an offense involving fraud, okay, which involves or is expected to involve individually an amount of 1 crore or more. So 1 crore or more, if it is involved in that fraud, if he feels, is being or has been committed against the company by officers or employees of the company. So he is conducting an audit. He feels that the officers or employees are, it's called forensic audit. I have done it for NGOs. Many NGOs I have discovered fraud. But there my job was to discover fraud. I've gone there and I've gone tooth and nail, and I have even sort of questioned people. I have put them under oath and I have asked, what are you doing? What is this expense? I say, I'm putting to you this voucher, which you say you have. When did you spend it? By then we would have covered that location. We would have gone there, we would have got clear statement that such program was never conducted. Such thing never happened like that. Then we'll ask. So they will tell a lie, nah, that's it. I'll stitch it and I'll say, you have committed perjury and now you come. There, they'll start crying, then confessing, and all that happens. But that is a different story, okay? But in the case of a company, the minute you discover there is a fraud, an amount of 1 crore or more is being committed, you should immediately report the matter to the central government. No question of going to the... See, you go to the board. If the board doesn't do anything, you have the right to go to the central government. And a duty also. It's a duty and a right. But in case it is less than rupee 1 crore, you don't go to the board. You go to the conscience of the company. The conscience keeper of the company is the audit committee and the audit committee chairman. See, the role of the audit committee and the chairman is very, very powerful in foreign countries. But in India, it is watered down. But still, the MCA honorably believes that the audit committee chairman and the audit committee are powerful. So they say, if it is less than 1 crore, don't come to us. Please go to the audit committee. So what is the procedure you have to follow? You come across a fraud, then immediately report to the board within 2 days, asking for reply. We have found that quotations have been received from fraudulent quotations. These people those suppliers don't exist. Fraudulently, they have given quotation. One person has been selected who is shown as L1, but that price is boosted. The market price for this product is 20% less. With that price, the billing is happening. This whole process of tendering is fraud. I have seen it like that. Now, what do you want? So if the company wants to muzzle it or keep quiet, then they may not reply, they may do nonsense. But if nothing is happening 45 days, or if a reply is received, whatever, along with that reply, you send to the central government along with comments within 15 days of such receipt. Suppose the company gives a reply saying, we are in the process of rectifying the defect. Kindly sort of ignore it. Thank you. Give the reply. Along with that, you give a detailed note saying the fraud is so much, it has got so much impact. 3.5 crores as according to us in this year alone. The 20% difference. See, if I buy it in the market, the price is only 18 rupees. Plus, this guy, this lower court, L1 fellow is selling for 21 rupees. That means 3 rupees unnecessarily I'm paying now. Why? So that loss is to the company. No? The total amounts to 3 crores. So you can go and report it. I'm just giving an example. One example of how an auditor can come across fraud. Because, see, sales, not much fraud is possible today. Yeah? Because electronic payment, out of control of the employee, and continuous stock taking. So very difficult. Whereas in purchases, still fraud can happen. Believe me, I have seen so many fraud in purchases. In fact, if you're auditing, be very, very careful about purchases. Purchases is where the problem starts. Okay. In case there is no receipt of reply from the board, then straight away send a report to the central government. Okay. That's all. Your duty over. Thereafter, what the central government does is up to the central government and the board of directors. For all you know, after you reported, these fellows may go to the central government and tell, no, you know how it is. God, I don't know. But your duty is to report and be happy. Of course, in the meantime, that 45 days will be torture for the auditor. Na? Some gundas will threaten him. All sorts of calls will come. Like, in spite of that, the law wants you to be strong and report the fraud to the CG. The report will be sent to the MCA secretary in a sealed cover, registered post. Then the report shall be on the letter of the auditor and be signed with the auditor, etc. Okay. Now the report shall be in the form of statement as specified in Form 884. What is the type of fraud, etc. You give detailed note as per annexure, you send it off. Now you will actually ask me one question. See, sir, you are telling like this, but I have been taught in auditing that confidentiality is there. An auditor is not supposed to reveal this facts about his audit to anybody. No, sorry, not anybody. Normally, auditors are bound to maintain confidentiality. Normally, whatever information you are collecting through an audit, you are not supposed to disclose it to anybody. Not just the competitor, boss, even anybody. But where you are reporting the fraud in good faith in accordance with this subsection 12, there will be no contravention. They have given you the exemption. Don't do it. Similarly, one more thing I'll tell you. This confidentiality stops when you are appearing before a government department. Suppose the GST department is calling you on a summons to talk about the accounts of that company, fraudulent accounts of that company. There, before the GST authority, you cannot go and say to the GST commissioner, you cannot say, sorry, sir, confidentiality, I can't tell. No, you have to tell to the government. So basic exemption is government. Other than government, if somebody else, you should not disclose. No. For example, see, sometimes when we go for tendering now, in the GEM portal also, they will ask us to give details. I will say, we can't give you any details, Baba, except name of the client. If you want, we'll give you. Maybe his turnover we'll give you because there is publicly available information to give it to you. Other than that, I cannot. Okay. Number of employees, what is the complexity, and I cannot give all that because that will be violation of it. If you don't want me, don't want me. For tendering purposes, I have to give confidential information, I won't give. Sorry. Matter to be reported to the board if fraud is less than the specified amount. The nature of fraud should be given. That is in that Form 884 and with the approximate amount involved and parties involved. You have to name them. Similarly, the matter to be disclosed in board's report. That is, after the board receives your report, they have to give the nature of the fraud with description, etc. Also, remember, in your CARO, you have to report whether any fraud has been committed by or against the company. By also, you have to report in CARO. No more Satyam, no more Ramalinga Raju will happen again in this country. That is the slogan of the MCA. So now we come to government companies. How the government company auditor will be appointed? Simple. If the CAG only will appoint the government company auditor, you know that. You know how it happens. And the audit of a government company will be conducted under the supervision of the controller and auditor general. So he can direct the manner in which the accounts should be audited. They will give directions. And the audit report should mention those directions, the action taken, and the impact. So in addition to the normal reporting, the CAG will also give additional matters. In fact, there is an additional separate annexure to be attached, which will give a lot of proprietary issues will be covered with that. Government policy complaints will be complained with that. So once within 60 days of receipt of the audit report, the CAG will conduct a supplementary audit. Supplementary audit means additional. See, already the statutory audit is over. Everything is reported. Auditor has given qualification, etc. Now, the CAG will go and do supplementary audit. And based on that supplementary audit, he will add to the audit report or comment about the audit. In fact, whenever we are auditing government companies, after completing the audit and signing, we'll be praying to God, there should not be any supplementary, there should not be any comment like that. That comment is dangerous. Usually, the government, the CAG auditors also will be chartered accountants. And they will be well versed in accounting standards and Ind AS and all. So they'll come and sit on the neck and whatever we have done, they will do it again. And then they'll say, according to Ind AS, you should have done this disclosure should have come, that. Like normally they won't because you would also seen it, but if they do that, shame. Because then they will put a comment. So invariably, government company audit now, after the audit is over, we'll be holding our breath. 60 days, they will come and do. So then the MD of that company will call me as a partner and say, Srikanth, come. You go there, you give a cup of coffee. Srikanth, no comments. Clean. Then I'll say hallelujah, hallelujah, and then I'll go. Then that no comment will be added in the annual report. So no comment will be added in the annual report and published. In case the CAG gives any comment, then those comments will be given along with the audit report. That will also be sent. And then the annual report will be sent to everybody. And remember, in a government company, who is the main owner? Government. So it will be placed before that ministry also. And in sometimes the CAG may also conduct a test audit, meaning they might themselves audit some transactions. Please note, this supplementary audit basically is not a transactional audit. It is a sort of a quality review of the audit. The financial statement, disclosure, etc. will be verified. And then the actual facts will be seen. And whether it has been correctly disclosed is what they will be seeing. Sometimes they might also do a test audit of the transactions. Okay. This is regarding appointment of auditors of government companies. Right now. Then, branch. See, normally statutory auditor is entitled to visit the branch office. He can audit the branch also. But where a company has branch office, the accounts of that office shall be audited either by the company's auditor. So, boss, I will audit it. Yeah, why you have one more person? Give me extra some money, I will do that also. Oh, no. But suppose it's a remote location. And I don't want to go all the way there. And it's too costly for me to go all the way there. Not worth it. The transactions are very less. For that, I need not go all the way there. Then they might say, please get somebody to do it and bring. Okay. For example, one or two of my auditors have offices in Bangladesh. So once in a while you can go to Bangladesh, but every year I can't go to Bangladesh, sit there for 25 days. No way. So I have a Bangladeshi auditor and get it done. Then let him report it, send it to me. I will take care and put it into this report. So any other person qualified for appointment as an auditor of the company under section 139. So in case it's Bangladesh, then the local institute member only can. So if it is situated in a country outside India, then either the company's auditor or by an accountant or any other person qualified to act as an auditor of that in accordance with the laws of that country. So we have to see in Bangladesh, what is the body and whether that body can be taken. Then we will only review once in a while. We just go there and just to be sure that there is no collusive fraud with the auditor and the branch in charge. Just go there and see. Now the same duties and powers applicable to the company's auditor for the whole company will be available to the branch auditor for the branch. The branch auditor will prepare a report and send it to the auditor of the company. Friends, here is the major difference between statutory auditor and branch auditor. Statutory auditor is appointed by the shareholders. Branch auditor is also appointed by the shareholders, but statutory auditor sends his report to the shareholders. Branch auditor reports to the statutory auditor, the main auditor. The branch auditor has no locus with the members. There is no direct liability to the members. Once the main auditor takes his report and deals with it in his report, that's all. The branch auditor free. Now the statutory auditor will become caught. One major branch, there was a fraud. Lot of issues were there. MD was arrested and all. That bank, we were the statutory auditor, branch auditor for 5 years. Large branches. But I qualified like anything. My LFAR and my audit report will be qualified. In fact, zonal managers will come and beg me. Sir, don't do this, don't do this. Why should I take a risk, Baba? If you want, you go to your central statutory and get him to do it. Let him take that risk. And they did it. They took the risk. They ignored our report or my report and they passed. They did. All of them were debarred. I won't mention which bank it is, but all of them were debarred. They said no. So once that risk he takes now, he's out. Okay. See, some of the information I'm sharing are not secret. I'm not mentioning the name because of obvious reasons. You do a research and find out which bank it is and what happened and all, but it happened. See, once we have cleared now, that's it. The provisions, so the branch auditor should qualify or the branch auditor should highlight and send it. If there is any additional reporting requirement, like LFAR, long form audit report for banks, in that LFAR, you put everything clear. This is a potential NPA. There is no intention of the borrower to borrow. Project report was not submitted. No documents, nothing. The amount has been given without any scrutiny of the viability of the project. Write it. If they don't like it, but if they refuse to reappoint you, that is different. That we are appointed by the RBI. Who are you to tell me? Okay, like that. The provisions regarding reporting of fraud by the auditor shall also extend to such branch auditor to the extent it relates to the branch. So to that extent, he has to report fraud. But basically, point is, branch auditor does not report to the shareholders. He reports only to the statutory auditor. But otherwise, all powers and duties are same with respect to the branch. Now, for branch audit, see the provisions of this section means 143, total, complete powers and duties of an auditor, not just branch, complete, entire 143 powers and duties of auditor will apply to a cost auditor and a secretarial auditor. So what they've done, they've said, look here, what all powers are there to the central statutory auditor, what all powers are there, duties are there, cost auditor also has, secretarial auditor also has. Okay. And if any, but they say mutatis mutandis. Mutatis mutandis means with such changes as may be applicable. Obviously, CARO is not applicable to cost auditor. Got it? Similarly, secretarial auditor, no CARO, because that is only for statutory auditor. So there you cannot say, it says same now, so they also give. What they will give CARO? They can't. No CARO for them. They have other requirements. They have other reporting documents, which are specifically prescribed for them. If any auditor, cost accountant or companies, see, this is only with respect to powers and duties. The actual report and all that is separate. They have separate forms. If any auditor, cost accountant or company secretary in practice does not comply with the provisions of subsection 12, meaning fraud, reporting of fraud. Subsection 12 is reporting of fraud, right? Reporting of fraud. That, if that once provision he fails, he does not, then that auditor or that person will be liable for penalty of 5 lakh rupees. And in the case of any other company other than listed company, 1 lakh. Okay, it has been changed. Now this is what I have given in red is correct. This is old. This is old. This is the old provision. So if you, just for your information, it is given. So if you don't like it, please ignore it. Okay. What is current is given very clearly in this. the auditor's report will be signed by the person appointed as an auditor of the company. In the case of firm or LLP, only chartered accountants are authorized to act as statutory auditors. In case you still have a doubt, don't have. Only member of the Institute of Chartered Accountants of India can sign. Okay? The qualifications, observations, or comments which have any adverse effect on the functioning of the company shall be read before the company in general meeting. Right? Also, there's a duty of this auditor to attend the meeting. He is entitled to receive notices and he is bound to attend unless he is exempted by the company. For example, these fellows will have it on a day when I am traveling. So I will send a mail to him, okay, I have nothing to report. You still want me to come because I am going out and I'm not in India. What do you want me to do? No, Srikanth, you don't come. We don't take care. Just send a mail and we'll exempt you. So I will send a mail saying unavoidably absent. Kindly excuse me. They will send a mail exempted like that. Or if they don't exempt me, then I will send an authorized representative. Obviously, a junior partner I will send. That person also should be qualified to be an auditor. No. So I'll send a qualified assistant or a junior partner. Hey, Baba, go there. Yeah, they're having the AGM. So I have a cup of tea, eat the cashew nut pakoda and come back. Nothing, no duty. Simply sit on the dais, look at everybody smiling. When they reappoint us, fold your arms like this. Come, that's all. What else you have to do? Unless it's a listed company and the shareholders are, asking all sorts of questions, in which case I will go personally. And once the MD says, Srikanth, it is AGM is coming, you think you are afraid of exam? No. MD of certain companies are afraid of AGM. You won't believe. They'll be twisting in the pant. They'll call me 3 times. Srikanth, you are surely coming now. There will be no doubt now. I will send the car. Otherwise, this fellow will not even bother. I will send the car now. He will send his Benz car. There no need, sir. I have my Krista, which is enough for me always. He will come. They'll be there. Don't worry. He will sit next to you and hold your hand. Don't worry. They won't ask you any questions. No. This matter, company secretary is telling that CFOs, don't listen to all of them. We will advise the MD and say, don't worry about that. Be a sthita prajna. Whatever you've done, nothing will happen. Don't worry. So they'll call us and chala. The auditor shall have a right to be heard at such meeting. Suppose some comments are being made on the accounts now, I don't have to sit keeping quiet. I can also give a reply. In fact, but when they see me sitting in the dais, the shareholder also will not open his mouth. They know this guy is going to give a reply. Why waste our time? 1 or 2 senior members in the listed company, because I'm also very close to the investor associations. So they will start up. We want to ask the statutory auditor one question. Hello, ask me some question. You want to ask me? What do you want question? That why the foreign tour expenses are there? He went abroad, yeah. Why he went abroad? For the purpose of getting new order, but there are export orders. The company is having 30% export turnover. How do you think it happened? By sitting in Triplicane, he got it? No. He went all the way to Japan, only got it. Whether he goes to Vietnam and Japan, how he will get the order? Yeah. No. Thank you for clarifying this point. He'll sit down. Better sit down. So if you have the right answers to the questions, there's no big deal to be worried about all these things. Of course, the tone of voice I will not use like this. I will say, sir, we are very happy that you could make it for the AGM. We thank you for being here. No, it's okay. Then, sir, the company is having export turnover. Is that 30% turnover is there? You know that, no, sir? All that is happening because our MD is traveling to the foreign country at the cost of his personal life. He is going and he is getting the orders. So that is how the company is growing. Okay. Thank you for clarification. Like that, he'll sit down. See, poor fellows, they've invested 50,000, 1 lakh. Fellows want to be heard once in a while. Let them talk. After the AGM, again 1 more year. Next year only we are going to meet them. So, I've attended so many AGMs, it's fun for me when I go. Right from 1992, I have been attending AGMs of companies where I'm the auditor. It'll be fun. So, intervention of any of these sections, 139 to 146, by the company. See, auditor contravention, we have seen the specific penalties are there for specific offenses. Not uploading the resignation, ADT 3, not reporting fraud, for that separate. But otherwise, if there is a fraud, then you saw that what happens. He is removed, cannot be reappointed, 443. This is for the company, not complying with the procedures or anything. 139 to 146, any section. Penalty, 25,000 rupees up to 5. 1 lakh up 2 rupees, 1 lakh. That is 1 lakh rupees for officers. Earlier, there was imprisonment also that has now been deleted. So I just put there as an information, yeah. Because when I was teaching it in 21 and 22 and all, people will get worried. Sir, should I read? Should I read? For that I put. Now, even in your material, you won't find it. Imprisonment will not be there. Somebody was asking whether there's any problem, change between 23 and 24. Nothing much. Nothing much. Except that small companies we saw now. When I taught that thing, that small companies we taught, that changes happened. There is one change that happened between last exam. I think, yeah, last exam and this exam, small companies, I think. Even that came last exam, I think. Other than that, no major changes. Really. So whatever you studied then is good enough. You can continue with that. Don't worry. Sir, TYK, right? Mr. Jha. Oh, Ram, Jha. Long time since I saw your name, yeah. How are you? One sec. Let us see. Know your, what is it? Test your knowledge, yeah. I will do it, yeah. Just give me, boss, give me 5 minutes, yeah. Allow me to complete the topic and then we will do it, yeah. What do you say? All of you are in a hurry. Ram Jha, please explain TYK question. Baba, I will do it, yeah. Just give me time. Okay. Now, punishment for auditor. 139, 144. 144, you remember? Certain services which are exempt, not allowed to do. You do it, punishment. 145. Unknowingly, if he does it. Unknowingly. Nice, Mr. Ramja, welcome. Because you used to be very regularly putting comments and all that. Suddenly, and you're back. Welcome. So, unknowingly, fine rupees 25,000 to 5 lakhs. Unknowingly. Boss, how can a chartered accountant be unknowing? Yeah? This is one thing about Satyam Auditor I'm still not able to understand. You are telling you are a big firm, you are telling you are such big people, but you don't even know that they have boosted turnover, is it? That they've employed workers employee, that the fixed deposits are not represented really by records. You don't know that. So unknowingly, no problem. Then the fine is 25,000 to 5 lakhs or 4 times the remuneration, whichever is less. Now, knowingly, then imprisonment. Because knowingly, yeah, you know very well what you're doing is wrong. Then you are a hardened criminal. Then imprisonment up to 1 year, fine 50,000 to 25 lakhs. Or 8 times. 8x means 8 times. 8x means 8 into. So the normal remuneration into 8. 8 times. If he is convicted by the Serious Fraud Investigation Office or Tribunal or by the court, that is, in addition to this now, he will be taken before the court now. The court convicts him and says he is offender. Then he has to refund the remuneration received to the company. Whatever he was paid, he has to refund. And he has to pay damages. Okay? Now, the last topic we are going to see is this, cost audit. The central government may prescribe maintenance of particulars relating to the utilization of material or labor or to other items of cost as may be prescribed. This shall also be included. So, idea is the central government can prescribe maintenance of cost particulars. Not all companies have to maintain cost particulars. Okay. So, the central government, it has bought in many industries. See, it won't bring in specific company. It will begin class of company. For example, cement company, sugar company, power generation, like that. Like that, they have bought lot of industries. Okay. The entire list is available in the cost accounting rules and all that. You can verify. So, those classes of companies, for that, there is a set of rules, companies, cost records and audit rules. Believe me, this is not very relevant for companies act purpose. But if you're doing cost audit or cost accountant, then you will have to know it by heart. These rules and comply with them. Now, cost records are to be maintained by companies where the turnover is not less than rupees 35 crore. 35 crore turnover out of this. So, any company for which, should be in that industry for which cost audit has been compulsorily prescribed. Please understand. Cost audit has been prescribed for that industry. This company is in that industry. The turnover is not less than 35 crore. Then it has to maintain cost records as per the rules. Then, out of those companies which are maintaining cost records, certain companies should have mandatory cost audit. Who are they? If they are in the regulated sector, meaning the government is controlling the price or controlling the size. Today, regulated, very few are there. Very few are in the regulated sector. In those cases where the overall annual turnover from all products and services during immediately preceding financial year is greater than or equal to 50 crore. That is overall annual turnover from all products and services. Means your total turnover is 50 crores, above greater than or equal to 50 crores. And the aggregate turnover of this particular thing is 25 crores. Then if you are a non-regulated sector, then overall from all products and services is greater than 100 crore. In this turnover, aggregate of this industry turnover is 35 crore, greater than or equal to 35 crores. Then compulsory is cost audit. Okay. So 35 crore rupees seems to be some sort of a limit. Where the overall annual turnover, there is total turnover more than 100 crores. And for this prescribed industry class, the turnover is 35 crores or more. Then you have to. So the word used here is and. I hope you'll appreciate that the word used here is and. Because that means both the conditions are to be satisfied. Am I correct? Both the conditions are to be satisfied. Cost audit shall be conducted by a cost accountant who shall be appointed by the board. And for that, you should select from the members of the Institute of Cost Accountants of India. Okay, I think they are called ICAI, Cost Accountants of India, who shall be appointed by the board on such remuneration as may be determined by the members in such manner as may be prescribed. Now, no person appointed under 139 as statutory auditor shall be appointed cost auditor. So, to answer one important question, statutory auditor cannot become cost auditor. He may be qualified. No, one more thing. You cannot practice as a chartered accountant full-time and be a full-time cost accountant. You cannot be a full-time cost accountant and be a full-time chartered accountant. And there they are very clear. Only full-time chartered cost accountant can be auditor, cost auditor. So here, if I am part-time chartered accountant, no binding for me. My number will not be counted at all for anything. So either you be a full-time CA or a full-time costing. For example, I am a company secretary. What is the point in having COP as a company secretary? Because my earnings are coming from practice of CA. Why I will take a COP? If I want, I have to surrender this and go there. Why I will do that? For me, it doesn't look attractive. I know. But there are a lot of CAs who are company secretary who practice as company secretary because they find that to be more lucrative. So they are full-time practicing company secretary. But qualification, ACS and CA. So the cost auditor should comply with the cost auditing standards, etc. The board will appoint the cost auditor. So please understand, statutory auditor is a financial auditor is appointed by the shareholders. The cost auditor is appointed by the board. Okay. And where there's an audit committee, as usual, the audit committee will recommend and the board will appoint. Okay. Again, the audit committee will only recommend the remuneration and it will be ratified by the shareholders. Okay. The remuneration alone will be ratified by the shareholders. The appointment is done by the board, where there is an audit committee based on the recommendation of audit committee. Where there is no audit committee, the board shall identify. Obviously, there is a panel of cost auditors. Only few of them are there. So you can choose them and appoint. The audit conducted under section 148, cost audit, shall be addition to 143. I want to be clear. Any qualification, disqualification, rights, duties, etc. applicable to the normal auditor, company auditor, will also be applicable to cost auditor. So anything applicable to statutory auditor, suitable changes, it will be applicable to cost auditor. It shall be the duty of the company to give all assistance and facilities to the cost auditor for his audit. And the cost auditor will submit his report to the board of directors. The company will furnish the cost audit report to the central government. And then, if full information on any reservation, etc., the central government again may call for further information, and finally, the report will be closed. the central government will send a closure order. Say we are closed. This year, cost audit report closed. See, the cost audit report will be submitted in 22. By the time central government closes it, will be 23 November. In the meantime, the second year also they will start the work because they can't keep waiting. Then they will start this work. By the time that closure will be happening, it will be very fun. Large organizations where cost audit is compulsory. One side statutory audit will be going, another side cost audit will be going, continuously internal audit will be going. If you are CFO, you will go mad. So many things have to be handled. The company shall furnish the same within such time as may be specified by the government. Means further information and all. And then it will be closed. Once everything is satisfactory, it will be closed. If any default is made in complying with the provisions of Section 148, the company will also be liable in the same manner as 147(1). And the cost auditor will be in the same manner as 147(2) and 4. That is this one, and 1. Okay, same penalty for cost auditor also. Okay, so we have come to the end of this topic, but still I think we have a little time, and you people are very particular about TYK. Let me see what is there in the TYK. I think all of you are a little confused about that, what is that? Residual provision. I don't know. So let us see. TYK. Please explain TYK. I'll explain. Which one you want? Last question. Okay, let us see. What is the last question? For appointing an auditor other than retiring auditor, special notice is required. Ordinary notice is required. Neither ordinary nor special notice is required. Approval of central government is required. Boss, I'm going to show you the provision. Appointing an auditor other than retiring auditor. Please take it out. I taught this to you. One second. Please give me 1 minute. Appointing of auditor other than retiring auditor. Okay. For appointing an auditor other than retired auditor, special notice is required. That is the correct answer. Okay. Interesting. But for removing an auditor before the expiry of his term of office, special notice is not required. And it may not be done at the AGM. It can be done even at any other general meeting, EGM or whatever. Okay. But so I hope I have covered Mr. Ram Jha. Can you please take page number 10.54? And one more person, something else also somebody wanted yesterday. Anyway, sorry. Mr. Ramjak, have I covered? PYK question 7, no? I don't have it. Yeah. Test your knowledge, only 3 questions are there with me. Okay. 7, good. One second. The Board of Directors of A Limited requested its statutory auditor to accept the assignment of designing, I'll tell you. Designing and implementation of suitable financial to strengthen the internal control. How will you approach to this proposal? Actually, the correct English is, how will you approach this proposal? There's no need for a to there. Unnecessary proposition. How will you approach this proposal as a statutory auditor of A Limited? Taking into account the consequences, if any. Hello, brother. 144. Answer is 144. Let us see. They've covered it. So 144, yeah. This is one of the services not to be rendered by a auditor. Auditor not to render services. What is that? Design and implementation of any financial information system. Auditor shall not offer any of the following services. So how will you approach? By refusing, by politely informing the company that you cannot do it. Let us see. According to section 144 of the Companies Act, an auditor appointed under this act shall provide, etc., etc. So in case so it is what is to be done in the said instance, so and so to strengthen as per the above provision, the said service is strictly prohibited. So humble request is refuse to accept it. Politely say, oh, you cannot do. In case the statutory auditor accepts the assignment, he will attract the penal provisions of 147. है ना? Just now we saw na. 143 is huge, huh? Sorry. One 147 we saw na. That same provision. This one. This one. Even highlighted, see? Sorry. 144. Mr. Jha, I hope you got your answer. What is your doubt here? It's a fairly simple question. Have I taken the correct question? I'm still worried whether I have answered the correct question. Is this what you wanted me to answer? 7? It's a fairly straightforward question. Similarly, 6 was handled by me in, hey, 6 was, boss, TYK 6, I have, boss, this is all too much. TYK 6 is here. Hello, TYK 6 is here. TYK 6 is here. Hello. This is TYK 6. See the words also there. Mrs. KVG, spouse of Kumar. I covered this. I covered it in the last class. In that. So don't mistake me. You should also be concentrating on the class now. If you simply sleep and then say, cover TYK 6, cover TYK 5 like that. Hey, these test your knowledge questions come with the answers. Yeah. Most of the answers are clearly explained. So don't have doubt. It's fairly simple. See, what is this? Prakash, he's having paid a face value is only 70,000. Therefore, Prakash can be appointed as an auditor, even though Akash is a holding securities. Market value 110, face value 70,000. We did this. Who is asking for TYK 6? Rasmita Barik. One for you alone, Ms. Barik, I am doing this. Okay. Ramesh is a practicing chartered accountant indebted to MNP Limited. 6 lakhs. Sorry. Beyond 5 lakhs? No. So he cannot be appointed. KVJ is a spouse now. This lady KVJ is only storekeeper, not KNP or director. Therefore, Kumar can be appointed as auditor. Got it? No problem. See, the idea is simple. You shouldn't get frightened. Provisions are very simple. Once you understand it, it is enough. Most of the time, it is neither the board of studies material is a problem or teaching not. You are getting confused. Don't get confused. CA students have to be clear. You will get it. Okay. I hope we have got it. And thank you very much. And so see you next year. Yeah. Because the next class will be on the 2nd of January, inshallah. That is what I have been told, that I will be having a class on 2nd January when we will meet up again. Till then, I wish you all the very best and look forward to a new year when you will all qualify the intermediate exam and you start doing your articles or whatever. Or if you are doing it, you complete it and so on and so forth. Let 2024 be a great year for all of you. Wonderful year. I wish you all the very best. Good night.